Hello guys, this is Soji and you are welcome to Soji Forex. If you are new to this channel, this is your first time of coming across this channel, we share idea on financial advice on how you can become profitable in trading the financial market by the application of various trading strategies. And in today's video, we want to look at mistakes that you must avoid while using the Trader's Dynamics Index strategy, which is the TDI. And without wasting much time, let us dive into the topic of today. Now, on our indicator window, what we have here is the Traders Dynamics Index, and the TDI comprises of several indicators put together. We have the blue line, which is our Bollinger Band, which helps us to identify the market volatility. We have the green line, which is our price line, and this moves in line with the price action of the main chart. And then we have the red line, which is our signal line. We get signals to sell when the green line crosses the red signal line and vice versa. Then the gold or the yellow line is our signal, which give us the market sentiment, give us the overall view of the market, whether in an uptrend or in a downtrend. So now let's dive into what we must avoid while trading with the TDI. Number one, avoid when the Bollinger Band is shrink. Avoid trading when you realize that the Bollinger Band shrinks together. The Bollinger Band of the TDI help us to determine the market volatility. And just as you can see, this is the Bollinger Band of the TDI, which is the blue line. It helps us to determine the volatility of the market. So anytime you see the Bollinger Band of the TDI shrink together, you will notice that the market will not make any reasonable movement. Rather, the market will be ranging. You can see this. You can see this. So number one, avoid trading when you see the Bollinger Band shrinks together. That is rule number one. You need to wait for a breakout. You can see it here. It shrink together. Okay, so you avoid trading when the Bollinger Band is shrink together. That is rule number one. Then number two, you begin your analysis. Do not begin your analysis from a lower time frame. You always begin your analysis from the higher time frame, at least the 1 hour time frame. So begin your analysis from a higher time frame and not on a lower time frame, and at least from 1 hour time frame. And what are we saying is that before you begin to make your entry, come to your 1 hour time frame and look at the market sentiment line, which is the gold indicator on your chart. Okay, when you realized that the gold indicator is below the 50 zone, you should know that you are in a downtrend. Once it is below the 50 zone, it shows that you are in a downtrend. So you move to your M15 or you move to your M5 for your trade entry, and that means you'll be looking for only opportunity to sell. Just as we have here, our line is below the 50, and let's see what happened. Okay, all this zone we highlight is when it is below the 50. So let's go to our M15 time frame. Okay, now this is our M15 time frame. So you can see if we have been going with M15 time frame without considering the higher picture, here we would have been looking for opportunity to buy because it is up, whereas it is not. So we do what? We look for this opportunity on our higher time frame. So we'll begin from our higher time frame, and since from our 1 hour time frame, just as you can see, the line is below. The moving average is below the 50 level, and coming to our M15, we know that it's a signal to sell, and then we sell whenever we get a shark fin outside and the main chart. Once we get our shark fin outside of the Bollinger Band of the TDI, crossing our signal line is opportunity to sell because we are in a downtrend. Here it is, we get this shark fin, then it becomes opportunity to sell because based on our 1 hour, we are in a downtrend. And you can see how it sold from that zone. Here is another opportunity, here and here. So you begin your analysis from a higher time frame and not from a lower time frame. Here we have this. Okay, then number 2, what you must avoid. When you notice a divergence, always wait for a break of trend line. Do not enter a trade immediately you spot a divergence. Always wait for a break of the trend line or a break of structure, as the case may be. Okay, just in this case, we have a divergence here. This is a divergence. So you don't just jump into the trade, you wait for the neckline or the structure to be broken before you make your entry. All right. So these are the basic rules you need to know when you are trading the TDI indicator. And another rules you must know is let there be a separation between the price line and the signal line. Do not make entry when the price line and the signal line are entangled together. Just as you are seeing, you realize that in this zone, the red line, the green line, the yellow line, everything is entangled together. You don't make an entry when the indicators are entangled together. Now you can see the difference here when they are no longer together, where they were separated. You can see how the market moves to the upside. So anytime you see that the indicators are entangled together, which is the green price line and the red signal line are entangled together, it indicates a range. So please avoid trading when these two indicators are entangled together. Alright, so that is what we have to share in this video. Common mistakes you must avoid while trading the TDI. You can see the price, the green price entangled together with the price line, and I believe you are gaining value from this video. Please do not forget to like, do not forget to share this video, and above all, subscribe to the channel so that you get notified whenever we publish more exciting video. Until we come in our next subsequent video, see you.